TGIF Warriors. Hope everyone had a decent week. Weak dollar worked. What else worked? A couple of scalps in the S&Ps. Forex Analytix team putting out great trades in chat. How are you doing, Steve Bartholomew? How are you? Mike Weissman, how are you? Stel's here. Must be something happening. AJ Kale, welcome to F.A.C.E. Are you new here? You found the right place to become an A. Cy Brand. Brian's here. James, AJ. Welcome to a dollar that just went bearish. Well, it depends on your time frame about the just part, right? Hi, Linda, Mike. Frederick Lindstrom, welcome. How are you? Nuno, hello. Oh, am I on the interviews? Which side of the mic? Bill Hines, welcome to you. Team, how are you? So I heard an interesting take why we're massing naval power out off the shores of Venezuela. You guys want to hear it? Makes sense to me. The reason the narrative I heard was that recently Russia has a treaty with Cuba, and they're going to be placing military hardware there. And it shows the whole Gulf of Mexico is where the majority of our energy infrastructure is. I mean, through Texas and all of those areas. And every ship that comes or goes passes by Cuba. Cuba's like right in the middle, and you either get to the open seas, to the east or west of it. And so that it's really kind of a show of force that, just like Putin wasn't happy about Ukraine, this is his way of trying to make the U.S. understand it, and he's going to be active in Cuba like they were in the 60s. I don't know about nukes, but protecting our energy infrastructure along that whole Gulf of Mexico. I never thought of it. So anyway, that's a possibility why we're out there. And that means that, Venezuela is not the real reason. But, okay, that's just a narrative. We'll see. Let's start with Ryan. So good morning, buddy.
Good morning, sir. I was going to say I've seen that film before, the one you're describing there.
Oh yeah, do you think it's a possibility?
Listen, when it comes to the Russians, there's nothing that isn't a possibility with those guys. I mean, they get up to so much shenanigans over here.
Yeah.
Subs, aircraft invading airspace. We're always scrambling jets, and Europe's already scrambling jets. We've actually just done a deal with Norway, a defence deal with Norway, to set up submarine monitoring for Russian subs. So yeah, wow. They've got, if they had if they put as many people in Ukraine as they've got sailing around the seas and doing other things, they probably would have wrapped up that war a few years ago. But they're non-stop, them and the Chinese.
Okay. All right. So anyway, crazy like a fox, President Trump, huh? Anyway, we talked about this yesterday, Brian. It poked it, maybe cleaned out some stops and closed above it. The black line. It's all going to come down to the BOJ next week, right?
It is, and that's what drove that poke through overnight. More saucy stories nailing down a hike next week. Okay. So that's pretty much a done deal, which begs the question: how much is there left to squeeze out of that trade? I guess now, with the market leaning for a hike, the next move is going to come on, how they deliver that hike. Is it a one and a pause again, or are they going to say, yep, we're going to keep going? And that will be the final driver. But we've got back above that 155 level. We broke it yesterday, got back above, did it the day before, got back above. So really that's my key level here.
This looks like a magnet. You have anything at 55.75?
Got a level there.
Okay, because and it's probably not the same way I'm coming up with that level, which means there's confluence there.
Yeah,
moving average. And this was the overthrow line. Okay, so off this wedge, and when it had the blowout. So I think that's a pretty good area to maintain a bear case.
If we take this line left from your moving average, you'll see it was a bit of a support area when we came off the top at 155.70s.
Okay.
So yeah, I'm with you on that one. We've also got the 200 hourly moving average there as well. So there's a bit of confluence, as you say.
You have the 9-day.
Yeah, and I've got the look at that. I've got the 55 and the 100 4-hour at 79 and 84. So there's a ton of moving averages.
One thing I would say for sure, if we take out last night's low, there's some issues with this chart. So we'll
I agree with that. Yeah, so, I like the way it made a new low yesterday. It broke the prior low. It keeps the momentum going, but we can't get below and hold below that 45.50 area, nor can we stay below 155. So there's two levels you've got to stay below to bring more downside.
Okay. EG, when do you have to admit the trend has changed in EG?
When we're under my 87.20, perhaps.
Okay, so we're near your line in the sand.
Bang on it yesterday, but the bounce is very weak. But I think usually you get euro dollar cable influencing this one. I think today and yesterday this one is influencing the other two because that is potentially such a big level there at 86.20. The fact it nailed it yesterday and held it, and that pretty much marked a top in the other two pairs, I think is very significant.
Okay. All right. Yeah, what I'll be looking for as the Dixie, when the Dixie approaches 98, I'd like to see, Euro trade above 17, maybe towards 17 and a half, and a failing rally in Euro pound.
Yeah,
that would be a nice tell for me.
Yeah, conversely, if the dollar strengthens, this is probably going to go up because cable will fall faster than euro dollar.
Right. So it's a risk off, and we didn't really. Did we do much this week? I mean, I look at the short-term charts, and look at what we have here.
Yeah,
going back to the 26. I mean, look, this is, what is that? Is it distribution? A consolidation?
Yeah, I think it's consolidation because we, like you say, all week, what have we done top to bottom this week? 30, 40, what's the high? 40 odd pips?
Yeah. 40, about a 40 handle range, which, normally could be one day you get 40 handle ranges. Okay. WTI.
I think that's what you're highlighting there, Dale, is perfect. What we are generally seeing in volatility at the moment, which is a big reduction. We still get headline moves and the like, but in FX, vols are coming down. Euro dollar's under 5%. Cables nearing 5%. Dollar yen's even coming down 8.2%. It's getting sucked out. Now let's keep our fingers crossed that doesn't run into next year, which is possible because a lot of central banks are sitting on their hands now. So that's a big part of the reason why we have volatility is the central bank expectation trade. And if everyone's sitting on their hands for a few months. That's not going to bode well. But that brings us different way of trading it. We have to trade ranges, tight ranges, more short term. So we adjust.
Yeah, I mean, I'm used to looking at the screen and seeing everything blinking at me.
Yeah.
Right now, it's like a pirate with one eye. That and he has a hard time blinking with the other.
It's cycles. Volatility goes in cycles, and
Yeah,
volatility follows central bank cycles, and we
yeah,
are coming to the end of a cut cycle for a lot of banks.
yeah.
So volatility will come down until the next piece of poo hits the fan. Let's put it that way.
Okay, so Canada following through. So I'm looking for around here, you know,
Yeah,
yeah, that area.
I think it's possible. I think it's very possible.
Yeah,
What are we trading now? Yeah, we again, it's another level we struggle to get and hold under that 139.40s. I
yeah.
know people have got a few trend lines around there as well, but it's there's also a fib down there if I'm not mistaken. Let me just hop on my chart. Yeah, so the 38.2 is at 139.11. That's of the June rally
Okay,
when we hit the bottom. So it's around that 139 area is the next big sticky one.
okay. And I would start keeping an eye on the yen crosses here, you depending upon how it's resolved next week.
Yeah,
Even if we make a new high. So the guppies looks like the strength would, just like EG, Euro yen lagging. But to me, maybe it could generate one more high. I think that it's potentially topping. I'd like to see one more high in Euro yen with the RSI not getting above 70.
yeah.
That's what I would look for there.
It's as I said last week. When we came off those highs in dollar yen, it's not so much all about the yen now. Like dollar yen's coming off, euro yen isn't, pound
Right,
yen isn't, as you're just showing there.
right,
So there's a divergence. So that shows that we are less involved about what's going on in Japan and more involved in what's going on elsewhere, because obviously dollar yen's coming off and the dollar's been weak all for the last couple of weeks.
yeah,
So yeah, those could still break to new highs. It's very possible, but dollar yen may not follow.
okay. Anything else that you want to cover? And then I'll bring on Stel for this.
No, you can bring on Stel. I'm sure we'll talk about other bits and bobs in a mo. Let's give
Oh.
the little man his moment in the
Little man, thank you.
little man his moment in the sun because it's been raining over there, right?
So I'm going to be showing the 134.5 hour moving average. No, I'm kidding. Okay, so let's go with desktop one. I'm going to be talking a bit macro here and big picture, but I'll have a look at a few things. So I'm going to start with yields as always. And we can clearly see that the 10-year US is still in the range. By the way, I got out of my TLT roughly at flat, very small loss. I'm not going. I think we're going lower in yields first, but we might go towards the first towards the top end of this. So I'm waiting to see if I can get a better level to get in. But the big question is, we are at around 4% in 10-year, and the market is expecting Fed fund futures are pricing a terminal rate of around 3% by early 2027. So if we're going to 3% Fed funds rate, it's very difficult for the 10-year to go anywhere below 4. I mean, because it's an upward sloping curve always, unless the market thinks there's going to be World War III and biggest crash in history, etc. So usually it's an upward sloping curve, and when overnight is 3%, it's very reasonable for 10-year to be at 4%. So what do I think can happen for yields to go lower? Is it going to be more rate cuts or is it going to be QE? And I think it's going to be both. And I know it doesn't make sense, and I've said this before, and theoretically, with unemployment where it is, yes, it's rising, but still it's at low levels historically, with equities near all-time highs, with inflation at 3% when the target is 2, they really shouldn't be cutting. But the big problem and it's bigger problem in the US than the Eurozone, is that I think if I recall correctly, 19% of all revenues is spent on debt interest payments, just the interest payments. The the government cannot have that. They cannot have that rising. If you have yields rising, your interest expense is going to be rising. So what do? You have to issue more debt, etc., etc. The way that governments have always addressed this problem, as long as deficits persist, is they inflate the value of the debt away. What they do is they print more. They buy themselves using QE or other forms, non-QE that they call them, and Operation Twist and all the other stuff. So they buy more and more of the debt to keep interest rates low, and they must keep interest rates low as long as the deficit is still stable or rising, and it's rising. My thesis remains the same. I know it's a very, very long-term thesis because you have all sorts of things happening, in a week, in a month, in a year. But in the long term, this is how it's going to be. So unless I see deficits reducing, this is my thesis, and it remains so. And what does that tell me? That tells me that they're going to be stepping into the market again. They're going to be bringing yields low with every tool that they have, and they're going to find some way to how do you say it, to justify it. The problem in the US is bigger in the Eurozone. From, if I remember, in the Eurozone, it's less than 5%, the amount of revenues that they have to pay for debt interest payments. So as long as this persists, what do I think? Well, I think everything's going higher, especially real assets, especially things like gold, silver, platinum, etc. Even, the main indices. I think, unfortunately, it's a buy the dip situation with everything. And so to go back to yields, I think we're in obviously sideways consolidation here, but this is tightening. And at some point it's going to resolve, and I think we're going lower just for that reason. It doesn't make any sense, economically, in terms of economics of a nation. It doesn't make sense to do that as a central bank, but I think they're going to do it because they have no other option. So that happens with yields. The question also is what happens with the dollar, and the dollar is also kind of consolidating sideways over the past few months. It's had its ups and downs, but it's gone from 96 to 100, 101. Excuse me. And we are at a pretty major level here in terms of moving averages. We have the 50 and the 200 converging. We might have the golden cross here of the 50 moving above the 200. I still like the dollar in the short term. I think we are probably going to be moving towards and testing these highs at 100 point whatever 3 it is, but it will all depend on what the Federal Reserve does. If the Fed starts cutting more aggressively than expected, then obviously the dollar is going to see weakness, and it's a mathematics 101 for if this happens. So for now, for choice, I like the dollar, but there are some currencies that I would not want to be long the dollar against, and the usual ones. Norway is one. Sorry, not Euro Norway, dollar Norway, which has fallen, below this channel. It's tested a couple of times, and I think we're ready to start venturing below. And the other one is dollar MEX, which again technically looks for me like we have tried to get back to this zone here, but we're going lower again. We have to remember there's positive carry, not as good as it used to be, but still pretty good positive carry. And so I don't want to be long dollars against that. The cable is interesting because the pound has been seeing a little bit of strength recently, and I think Ryan is spot on with the euro that's 87.20. And excuse me, my throat is not very well today, and it's been a pretty tight, not tight, but well-defined range that the euro pound has. It's between 82-ish and 90. 91 or something like that. We've been going back and forth all the time for the past 4 or 5 years. I thought that euro pound would try to stretch towards 90. It's not, especially when we were here at 88 and a half. I thought we were definitely getting there, and I would have loved to get short there, but it didn't quite reach that. It's the dollar is a very tough one because it clearly depends on what the Fed's going to be doing, and as I said before, if they're going to start cutting more than expected, or God forbid, start doing QE in some form or another, then I think the dollar is going to be testing these lows here at 96. So for now, I'm not doing anything with the dollar. What I am doing is I'm looking at precious metals, and I got along a little bit of silver and a bit more of quite a bit more of platinum. I'm going to have a look at all three. Gold is doing very well, very short dips and shallow dips, sorry, and get bought straight away. It is the king of the metals, but it's been outperformed by silver recently. So, I'm still bullish gold, especially if we break out to new all-time highs. There's no reason to be selling gold here, especially if we do get lower yields, like I think we will. If you look at the gold-silver ratio, we have broken below this trend line, only 3 or 4 touches, but still enough. And as soon as we broke below 78, bang, it was huge move, huge. It was a big move, and now we're consolidating sideways, and probably looks like a flag where we go lower on this ratio. So I am still bullish silver. We're very close to the all-time highs. I got long a bit a few days ago. I wrote on the chat room, excuse me again, marginally below these levels, so it's tiny bit in the green, but nothing massive. I think we will break the highs and go to new all-time highs. But my favorite by a mile is now platinum. Has been for a while, but now I'm starting to accumulate bigger positions than silver, quite a bit bigger actually. There is this trend line which goes way back. There was a bit of a breakdown there, but it can never be perfect. And it's been underperforming in a really big way over the past decade. And of course, the main reason is because platinum is mostly used in cars, in catalytic converters. And the market thinks that in 5 or 10 years time there's going to be no internal combustion engines left. I strongly disagree with that, because I am a big car nut, and I follow the market quite a bit. I really don't think so. I think platinum theoretically should be where gold is, and platinum's gone from same price or more expensive than gold to a third of the price. I really like it. I've been getting long, and I'm going to be getting longer once we break this channel here. And we're still quite a bit below all-time highs in platinum, which was about 2,300. Remember, platinum is 30 times rarer than gold, and it's almost all of it is used in industry. Very little is kept for investment and jewelry and stuff. So there's a lot of potential. Of course, this trade could take months to work out. Similar to my silver trades of the past, ForexAnalytix members will know. I had positions which took a year or more than a year to work out, but man, when they worked out, you annualize that, and it's a really nice move. So patience required. I am really waiting for a break above 1725 or wherever it's going to be on that channel, and after that, 1730. That's it. I think we're going.
Remember that day you were crying to me before it started working?
I was crying my eyes out, yeah. But I really like it. I mean, I don't know how else to say it. I really do. And again, today it's underperforming.
Say you love it. Say you love it.
I love it.
There you go.
Anyway, yeah, and looking at stocks, I mean, again, there's no reason to be bearish right now. Yes, we are overextended in terms of valuations. Yes, AI is a joke, in my opinion, the way valuations are in terms of revenue versus market cap. I don't know if you guys saw Meta firing a chunk of people over their metaverse efforts, which have collapsed. And we were saying at the time, I was saying, I don't really understand this metaverse thing. Why is it of any value? And clearly it looks like it doesn't have any value. So I don't think AI doesn't have value. Obviously, it's going to be a huge tool in the future. But I think right now the markets have gone way ahead of themselves in terms of valuations, because they're trying to figure out who's going to be the leader, right? Especially similar way like with the dot-com boom, where you had the Amazons and the Apples and all those companies trying to figure out which one is going to be the leader. Well, Amazon was the leader in the end in retail, but they had an 80% drop, right, on the dot-com bust. So we're going to find out who the leader is going to be in this regard. But I think it's too early to be trying to figure it out.
I put all my money in pets.com.
Pets.com, that's it.
Yes.
Anyway, so I think we are overvalued in terms of AI. But does this chart tell me we're bearish in stocks? Of course not. Absolutely not. when we were talking about this 65.30 level, we touched it and then bam, straight above. So that tells me we're still full on bullish. Anyway, that's more or less what I have to say. Cryptos, excuse me, cryptos are still not looking very good. You know, Bitcoin bounced, but I did say in the chat room we need to go above 93, 94K for us to say that we're probably going up towards 100 again. We failed there, and we're now range bound between 94 and 85 or whatever that is. So still patience required for crypto if you're a bull.
Thanks for
That's
bringing
it,
your telescope. Thanks for bringing your
telescope.
telescope today, buddy.
Yeah. That's it. I don't have much else to say. We have a few more minutes until numbers. Do we have any data today? Let's see. Hold on.
Right.
Yeah, we've got Canadian jobs at the bottom of the hour. And,
do we get
PCE
PCE on in an hour and a half?
Yeah, it's
Oh,
September's number, so it's a bit old, but
okay, it's okay.
Yeah,
It's still a data point. Oh, we did get Germany factory orders today better than expected, and Eurozone GDP 0.1 better than expected. So that's good news from the Eurozone. But
sorry, excuse me, I was just choking with laughter there.
that reminds me of the Top Gun scene where the guy goes, how could you see him if you were above him? And he goes, because I was inverted. And Iceman goes, bullshit.
Yeah.
Anyway.
Hey guys, you have your feet on the ground in the UK and Greece.
Yep.
The way NATO, made a statement this week, where they would consider preemptive, just to say, we're here, what's the vibe in Europe? Are people worried about a war with Russia in Europe?
Well, I can tell you for Greece, with the people I speak to, there are so many other things to worry about.
Okay, yeah.
But of course, it is something that worries people. But the main thing in Greece, and I'm guessing in most European countries, is just how expensive things have become in terms of salaries compared to costs. That's number one.
Yeah, that's a global thing. Same thing here. Yeah.
Why? Is there any inflation?
There's no inflation, man. Seriously. No, but seriously.
I'm still very worried about deflation, Stel. I don't know about you.
Remember Krugman saying, "Oh, we should be worried about deflation." I mean,
yes, I was always very, very worried.
Come on.
Yeah.
I'm worried about the price of goods becoming cheaper and cheaper. Seriously, it's a big problem.
Yes. I mean, imagine if that one day happened to us. Imagine.
He changed his last name because he was wrong.
What did he change it
to Paul Krugerian.
Yeah, I guess it's the same in the UK, right, Ryan? It's about costs and security and stuff like that way before war.
Yeah, there wouldn't be a war because it would just be bombs and missiles. So it's not as if people are going to be heading on the front lines or anything. But yeah, I don't think Putin could take on the rest of Europe with just manpower. As we know, he's struggling in Ukraine as it is. But yeah.
I want you in the foxhole with me, Ryan.
I'm going to be in your bunker, mate.
We could trade it. We could trade the war from there.
Yeah, I'm going to eat your spam and drink your whiskey.
And we'll do a little scalping from there too.
Yeah, and moonshining.
All right. Well, I guess that's a wrap for today.
Yeah, we got the Canadian data. Let's see
let's see that. I do like Crown Royal. I bought a bottle. Maybe it shows up. Let's see.
And what are we expecting for the US? Oh, it's not here. Why is it not here? Upcoming events.
That's
Canada?
California unemployment rate. Not Canada.
What's the situation like in the US, Dale? What are people worried about most, do you think?
Same things. Salaries. People are getting paid the same they were 5-10 years ago, and things have doubled.
No.
Yeah.
Liar.
Yeah. So they're yeah.
Yeah. It's a similar thing, and unfortunately, the gap between the top, 5% and the rest of the world is increasing, and I really don't know how this is going to stop. How's this going to end?
No, it's going to keep accelerating.
Yeah. And then people revolt.
There will, there will be eventually. Look, if people can't afford the basic necessities
Yeah.
in life, how can't there be social unrest?
Yeah. Oh, numbers. Oh, very good
Another
day.
big one. Another big one.
What?
53.6 thousand. I'll tell you what, they can't forecast the sun coming up in that country.
Wow.
Whoa.
Look at that unemployment rate, 6.5%. Wow.
Oh,
What's
the USD
Canada
CAD
doing?
is
It's
at
not
yeah.
even moving.
It's not moving.
that.
Why is that? Right on the 200 DMA. Okay, interesting. Anyway,
Let's see. Yeah. Okay. So that's happening in Canada. Oh, it's a Canada dry. Yeah, that's good. USCPI came out.
did
Is
it?
that true, guys?
What?
That's what AJ's saying. They released the CPI.
For when?
You see it?
No.
No.
Where
I
did you
don't
get
see it.
that, AJ?
Well, dollar CAD's just touching that 38.2 fib, and where you've got your level, Dow, 138.10. That's 139.10, sorry.
Okay. Okay, it's PCE at 10 a.m.
Yeah.
Okay.
Okay.
All right. Well, listen, guys, have a great weekend. Steve, have a nice weekend. Stel, Ryan.
Same to you, Dale.
Yeah, and thanks, Ryan, for being in the battle with us every day.
Pleasure, mate.
And thank you,
you know,
Coach, for
Leading
being
the charge. Yeah.
being in charge and organizing everything so well at week in, week out.
Dale,
in charge of the circus here.
yeah, Dale, it's like a television show. Dale in charge. Oh, that was Charles in charge. Scott Baio. Never watched an episode, I promise. So everyone have a great weekend, and enjoy the holiday spirit. And next week's big, right? Central banks. The Fed and the
Yes, indeed.
BOJ. I think volatility will pick up from this week. And you know what they say, never sell a sleeping market. So it's going to be some nice action next week. Don't
I was
just count
asleep
your
when they said that.
what? Yeah, nice action. Anyway, don't just count your pips, count your blessings. Tell the people in your life how you feel about them.
I hate most of
Either
them.
way, yeah,
They know.
say that. Yeah, you don't have to tell them anymore. All right. All right. All right, everyone. Have a great weekend. Sign up, get in the chat room, and make some money next week. Adios, everyone.
Cheers, everybody.
See you
Cheers, Dale.
guys. See you guys.